And welcome. This is Mary Ellen McGonagle with the MEM Edge show. This show is brought to you each and every Friday at 2 p.m. Pacific time. And I welcome you today. Look forward to seeing you each and every Friday. Let's go ahead and get started. We have, as usual, a fair amount to cover because this is the show where we put you in front of where the action is in the broader markets. And I have to say, this week was rather lackluster going into Friday. Today seemed to, the broader markets did seem to explode. However, I will tell you that lackluster behavior where the markets were up only 0.3% midweek really was not telling the whole story. There are huge pockets of strength that are occurring beneath the surface, and we will get into that. Those of you that are subscribers to my MEM Investment Research bi-weekly report are well aware of those pockets of strength. We've been able to capitalize on them with those stocks on our suggested holdings list. Today, I'll share an overview of where the strength is. And then also, as usual, we're going to take a look at the current markets. Where are we now? I'll tell you, we are and have seen our sixth consecutive week of gains in the S&P 500. So certainly is a good time for the bulls. We're also going to take a look at the move into healthcare. It was one of the bigger movers this week. There were a couple of reasons why, and it's an area that we've been covering on this show here more recently. Last week, we took a very close look at biotechs, a lot of dynamics that are coming together for this group. So we'll go ahead and get into that. Also, there are still stocks that are due to report next week. We're not out of earnings season yet. From my work, we get into some really exciting reports toward the end of earnings season, and that's because a lot of consumer discretionary stocks do report at the end of the earnings season. You'll see a lot of these retailers and consumer-related names. A lot of them have some good growth stories. So we'll take a look at some of the names due to report next week that you will want to be aware of. And also Chinese ADRs. We are seeing a little bit of a liftoff with trade relief. The Chinese broader markets were not up for the week, but there are some individual stocks that are picking up and well worth noting. And then also one item I wanted to share with you, and I've done this in the past, it does bear repeating, and that's the concept of using what I call daily moves. We are in a very bullish period for the markets. As we review, you're going to be able to see that quite clearly. I did mention we are into that 7th week of gains, so that is certainly very telling. And when we get into these periods of bullishness, there are some ways that you can get in front of stocks for shorter term plays. This is for those of you that are perhaps swing traders. You have a little bit shorter term of a horizon for your investing. And in essence, you're capitalizing on this bullish phase. Now, as I mentioned, we are in a period where the broader markets really are not telling you the entire story, but let's take a look at this next screen and I'll share with you the concept that I'm talking about. What we're looking at here is a candle glance view. This is, of course, from StockCharts.com. What I did is took a snapshot at the close yesterday, Thursday, of those stocks on the S&P 500 that are up the most. So when we go over to StockCharts.com in about a minute, you're going to see just how quickly and clearly this can come to you. It's on that front interface page. It's done for you as far as listing those stocks. Click of a button, you can then get this what we call candle glance view. It's a 2-month daily price chart. It's in no particular order. Actually, it is, pardon me. Normally it is by that percent up on that day. So let's take a look. These are those stocks that, again, on Thursday were up the most on the S&P 500, quite simply top 10 performers. We have Boeing, UNH, 3M, Nike, American Express is there, Microsoft, Home Depot, UTX, Coca-Cola, and Dow. Now, if you take a look closer, some of the dynamics that I need to see in order to get interested in a stock or to think that it could have further upside is taking a look at the position relative to these simple moving averages. On the candle glance, there is a 20-day and a 50-day simple moving average, and this red line is your 50-day, and the blue line is that 20-day simple moving average. I just want to make sure I'm telling you the proper signals here. 360, yes. Okay, so what I'd like to see when these stocks are having these big daily moves, for me to be interested, I definitely need to see the stock up above these simple moving averages. And the reason there is because if they are not yet above these, in this case, Coca-Cola downward trending simple moving averages will tend to act as resistance. So you want to be on the plus side. The other action that is very, very telling and attractive from my work, I've been doing this for over 25 years, advising institutions and now self-directed investors on the characteristics of a stock poised to trade higher. So let's just take a look at Home Depot as a for instance. And this is a stock that I'm very, very familiar with. We can see that it peaked back here in mid-October. More recently has been in a very choppy go nowhere environment, pulled back to this longer term 50-day, but it held support. That is very constructive action. And then on Thursday, it broke back above this shorter term simple moving average. So from my work, that is bullish. We can take a look at similar action here with Nike. Nike, of course, fell out of bed, a new CEO, China-related issues, but it too generally held support. It was in a very tight trading range back and filled around this 50-day simple moving average. We can take a look at a longer term chart in a minute because you'll see that Nike has had a history of being able to just bounce around just below its 50-day and still resume and recover. So we can see again on this particular stock on the daily, Nike broke back up above these both over this 2-day period, both of these simple moving averages. So just a couple of bullish characteristics. The reason I'm pointing this out to you is when we are in a bull market phase, we have Microsoft hitting a new high. These stocks are up for a reason, and oftentimes on that next following trading day, you will see a continuation should the broader markets, should they be up on that following day. So we will get into that. I think you'll find it really interesting because, as I said, it's a really shortcut way to get into some of these stocks that are on the move. Before we get into those stocks, what I'd like to do is take just a minute and share with you where we are with the broader markets. Now, that was Thursday's close. This is with today's nice uptick, market up about 0.8%. And in fact, the markets are up 0.9% for the week. So you can see it was very, very flat. Today's action really defined the week. So we have the RSI, that's your relative strength indicator, up here above in an uptrend, up above that 50, which is neutral. So it's heading upward. That is very constructive. For my work, I like to use the 10-day simple moving average, a bit shorter term. And quite simply, that's a smoothed out version of the last 10 days of trading. We can see the S&P 500 is finding support at this upward trending shorter term moving average. And that's really very constructive. We can go down here to the moving average, convergence, divergence. This is another momentum indicator, MACD. You want to look for this black line crossing either up or, in this case, below this red signal line. So across up above is signaling that this downtrending period, there has been a shift in momentum upward. And then, of course, as it breaks up the MACD above that 50, it gets even more constructive. So we've been up here above 80. That's overbought. And we've been in this overbought period for actually, as you can imagine, we've had 6 weeks of an increase in the broader markets. It has been up here for quite some time. So you can go back historically a bit choppy, but certainly from January to March, it did retain an overbought bought position during that period as well. The RSI just now getting up above 70, that is also giving you an overbought condition. Quite simply just alerting you, because we can go back here to the end of April. We had a very significant, nice uptrend for the most part in the S&P, dips up above here, overbought, and then we do see a pullback. It's not a mandatory event, but it is just telling you that we are potentially a bit overbought in the broader markets. So that's a view. We are still in an uptrend here in the shorter term, but let's go back. And what I want to do is share with you, take a look at some of those stocks that we were showing you on Thursday that were up for the day, and see how they may have performed subsequently. So here is Nike. This is that bullish move that I talked about, where the stock price broke above these simple moving averages. Now, with this longer term view, we have even more information. And this is something you can easily get if you use that list and click onto the ticker symbol. You can get this because we're seeing an RSI that's positive, and then that moving average convergence divergence MACD also turning positive in conjunction with the break above these simple moving averages. So to cut to the chase, Nike was up 2% today, so double the broader markets. Let's take a look at Home Depot, see if we had not quite as much action, actually, only up 0.3%. We do have positive RSI and a MACD. I will tell you, Home Depot is one of those stocks that is due to report earnings next week, so that very well may be the case. Microsoft was another name that we can take a quick look at because that was on the list from Thursday. And indeed, it did hit yet another new high, up 1.3%, just certainly at least 30% more than the broader markets. So let me share with you how you can get to this on a regular basis for those of you that are fans of StockCharts.com, which is a wonderful, great service. Let's go to this S&P 500. You can modify this down here to reflect the indices that you like to pay attention to. And again, quite simply, market movers percent up. So here we are. This is today's action. And boy, does this snapshot tell a story. We can see Applied Material. This is a semiconductor stock, came out with earnings up 8%. And a number of these healthcare. We're going to get into that healthcare move in a minute. But as I mentioned from here, quite simply, what you can do is hover over the ticker symbol to get a view of the chart. And from there, go ahead and take it just a step further and look at the individual stock. This is DXC, a small cap tech name. So that's the shortcut that I did want to share with you during bullish periods. Another tip for that is to use intraday charts because they will be very telling. I'm going to go back to Nike as an example. We can pull up an intraday chart and take a look at the close yesterday. That's that list that we were looking at. And here we are. This is the close on Nike on Thursday, and we can see I have shorter term on this 1 minute chart, 5 and 13 simple moving averages. So the intraday for me is going to be the 1 hour chart, finding support at these simple moving averages. Your RSI was positive, as was your MACD. So in fact, it did foretell this nice gap up and 2% move into Nike. We will take a little bit of a break here. We have lots more that we're going to cover relative to, as I mentioned, healthcare stocks due to report next week, and where are those pockets of strength. We'll be right back. And welcome back. What we're looking at here, and I'm going to share with you, is something that we do each and every week. It is a look at the sectors within the S&P 500. And this is all about, again, trying to drill down, uncover specifically where money flows are in the broader markets. And the sole purpose there is to help you refine your search so that you can get in front of these areas of strength as money continues to potentially move into those areas. So this is that candle glance view with the S&P 500 as well as the S&P 500. I've gone ahead and added an RSI, that's your relative strength indicator, sorted it by descending. I want to see the strength up here on this upper left quartile, and then it journeys down into the weaker area. Now, this is not telling you last week, for instance, because at the first glance, indeed, XLV is healthcare. That was the top performer for the week, up 2.4%. But take a look down here at real estate, even though it's showing way down on the lower right as the weakest, for this particular week, this index was up 2%. It is giving you a bit of a longer view. This is that peak back here about 3 weeks ago on the real estate REIT area, which has bounced. This is a broader view, but still quite as equally powerful, because we can see the S&P 500 is listed here, but take a look at technology. The strength in technology has really been superb, and this is what you want to see during a bull market phase. A lot of these tech stocks, XLK is the ticker symbol for this ETF. Technology stocks, you're going to have a lot of high growth names, innovative companies. This shows confidence in the markets and the fact that these companies are still outperforming, again, is quite bullish. Industrials, XLI is the ticker symbol for this. This has been a fairly recent move over the last 6 weeks into the industrials. And as we drill down, I'm going to share another snapshot with you. I'll share with you where specifically within industrials, we can do the same for tech, where the strength is that is driving this particular outperformance. Financials, this is another newer, similar to industrials over the last 6 weeks, holding in quite well. They didn't have, they were negative for this week, but I would argue that they pulled back after this significant move, although there are pockets of strength that are belying this actual decline that we did see this week, basic materials and so forth. So what I wanted to point out to you here is take a look at the discretionary stocks. They have been languishing for some time. I would argue that a lot of that is about to change with these major retailers that are due to report next week. We'll take a look at some of those stocks. This is that deterioration that we saw in utility and retail. These are your higher yielding defensive areas. As the market goes into its 6th week of moves, these stocks did get less attractive. And also we saw a spike in yields, but they are potentially bouncing. So that's your sector view. Now we can go ahead and drill down and look at industry groups. Again, all with an eye towards spotting where the current strength is. And what I've done here is populated a number of ETFs. And as we go into this, I'll reveal to you, because a lot of these might be not so familiar to you. The first, of course, we have is the Dow Jones Industrial Average. So this is the same concept where I have strength to weakness. So up here in this upper quartile are your stronger moves. And then actually over the last, certainly at least 1 to 2 months. And what we can see up here is this I have is FFTY. This is a ETF that is comprised of innovative, very fast growing, high growth stocks. FFTY, this I'll tell you, we can take a quick peek here, because take a look at this deterioration that happened since August. This is going to be a lot of fast-moving healthcare tech names really fell out of favor. But this week in particular, it's been a supercharged uptrend here, very constructive. Your MACD just turning positive. So this is giving you a sense of where the renewed strength is here more recently. But there is something interesting going on where I'm going to share with you what's called DVP. This is an ETF. It's called Deep Value. So take a look at that. We have growth and deep value rallying simultaneously, and that's a very unique situation. I will tell you, I'm familiar with this ETF. I did write an article about it last Wednesday. You can go to StockCharts articles and you will read all about this phenom as far as this move into deep value and how you can participate in it. So again, here with an eye toward pointing out where we are seeing strength. Biotechs we talked about last week, and they're continuing to hold up really quite well. Another bullish sign for the markets, because these generally are riskier stocks. So when you see money flows into that, that's very constructive. IGV, this is the software ETF, and this is another area that I have been on the prowl because there were lots of big winning stocks on the MEM Edge report from my MEM Investment Research. I urge you to go ahead and take a trial because, for instance, in the beginning of this year, we were able to identify and alert subscribers to a number of these big, fast-growing, high-performing software stocks. So we're on the prowl for this turnaround. Microsoft remained on the list of the MEM Edge list as it continues to hit a new high. It is a big component of IGV, but there are other names that are percolating. I'm going to share those this weekend with my subscribers, so you will want to get in front of that and take a look, take a trial of that report. But moving right along today, I did want to share, I talked to you about industrials having a nice move, and a lot of that is these transports, the transportation stocks. Now they did pull back this week, but prior to that, there are a lot of rail stocks, truckers, and so forth. So that's a big part of that move into industrial stocks. Now let's go ahead, because I would be remiss with not sharing with you, I talked to you about it a couple of times, with the strength that is happening in healthcare. One of the primary drivers, for those of you that may not have caught the news, the holdings for Buffett's Berkshire Hathaway funds was revealed. He made some shifts to his holdings where he sold some names, bought others, and this is big news for a lot of investors who are Buffett fans. And of course, one of his comments did center around healthcare. Let's take a look at this move this week, and in today, a big part of that. Healthcare providers. And by the way, what I did want to share with you on this is we're looking at today's big move. If we go back very quickly to that list from Friday, take a look at the number 2 up on the S&P 500 on Thursday, and then we can go ahead back to this healthcare providers list, and we can sort it by scooter, and we can see, actually it's not listed here, but I will tell you UNH was one of the big movers today in conjunction. Take a look at this, up 5%, and that was on that Thursday close percent movers on the S&P 500. But moving back to the news that is driving the move into some of these healthcare providers, Buffett did come out with a statement that he believes that within 3 years, the Medicare for All policy will be in place. Certainly doesn't mean it will be in place, but it is very, very bullish for these types of stocks. So what we are seeing here are healthcare providers. A lot of these are going to be HMO type of stocks. Anthem, Blue Cross, Humana. Okay, here is UNH, one of the bigger movers, and so on. So what we can do with healthcare, of course, is take a look at some of these other areas, because it's not just healthcare providers that are going to benefit. A lot of these medical equipment, medical supplies companies are also going to benefit. It's all about insurance paying for some of these innovative equipment and supplies that are being utilized for individuals. So what we can do here is take a look at the medical equipment. And at first glance, when you look at some of these super big performers, a lot of them are going to have low, what are called scooter, SCTR, that's the StockCharts technical rating, meaning they're really down and out, not the kind of stock certainly that I would like to traffic in. Instead, go ahead and sort it by this technical rating. You will want to be aware of these stocks that are up here in the forefront. This has been a big winner of late, came out with numbers. Let's take a quick look at ATEC. see as an example, this is a smaller stock. They provide products for spine disorders. They did just come out with numbers here. The stock broke out of this very long-term 4-month base on volume on earnings, very bullish, pulled back here to this 10-day simple moving average in an uptrend. Your RSI and your MACD are in an uptrend. Now this is a smaller, we can see the volume's not really there. What I'm sharing with you instead is how you can potentially uncover candidates with this new move into the healthcare area. And from my work, I do like to see stocks and companies that have earnings in place. This is a, I don't know if I want to share this with you or not. They don't really have the earnings, but it is a turnaround play, an IPO. Take a look at this golden cross, this green simple moving average up through the red. And we can have see that this RSI and the MACD are in positive territory. Not my first choice, but for those of you that like to get in early in some of these potential turnarounds, that is one way. ISRG is another one that was up 3% today. This is another company that I'm very familiar with. Oftentimes when I say that, that's code word for the MEM Investment Research MEM Edge report, where we're getting subscribers in front of these big movers. So we can see ISRG just poised to break out of this 6-week base. You have positive RSI, MACD signal, just poised the black line up through the red. So really in very bullish, good standing. So that's how we can play the move into healthcare as an example. As you go into these various sectors, I promised we would take a look at technology. Cannot leave without doing that, because what we want to take a look at is not only on the intraday, I'm more interested over the 1-week period. And we can see software, big significant move into that once outperforming area. Lots of stocks that are really looking very interesting here. And then semiconductors shows as being flat for the week, but there are pockets of strength. The number of the names on the MEM Edge report had big moves this week. Because if you have that ability to uncover the strength within a given industry group, you really are well served. Again, sorting it by this StockCharts technical rating. Just a couple of seconds here to tell you companies due to report next week. Home Depot, we have TJ Maxx, TJX, ROST. So we have a lot of these retailers that are coming out next week that you will want to keep an eye on. Actually, I do still have more time. Super. Get better with my clock here. So here is Ross Stores. They are due to report. We can take a look at some of these other larger bellwether names in that retail space. This is Lowe's, LOW, and we can see the stock had peaked here following this gap up. This is their prior earnings release, gapped up, pulled back. Now, I'll argue this pullback was in line with the broader market. September was generally a very tough period, but we can see it found support at this upward trending 50-day simple moving average, very bullish, and now it's continuing to trend upward, poised to break out of this nice 2-month base. So another stock that is due to report next week, and there are a number of them. I generally like to share with you those that are larger cap that could be impactful to other groups, other stocks in their group. And this is a large software stock, Intuit, INTU. This was a big winner for us with that MEM Edge report earlier in the year before falling out of bed. But more recently, we can see the stock is attempting to reverse. We have that positive RSI, MACD just almost getting positive. Really going to be interesting to see how they come out with their numbers. We'll take a quick look at Adobe, because Adobe did report